As of Monday, May 11, 2026, at 10:45 a.m. EDT, Micron Technology Inc. is trading live on the Nasdaq at $653.22, showing an intraday gain of $6.59, or approximately 1.02%. Trading volume is currently tracking significantly above its 10-day average, signaling high institutional conviction as the market digests the latest supply chain data coming out of East Asia. While the broader market expects a standard cyclical recovery, the reality on the ground is that we are witnessing a complete restructuring of the memory business. The common belief is that Micron is just a play on standard computer memory, but the insight most retail investors are missing is the aggressive shift in wafer allocation. Right now, Micron is sacrificing standard PC and smartphone memory production to feed the insatiable hunger for high bandwidth memory, or HBM. This creates a massive supply vacuum in the traditional market that will likely lead to a pricing spike in standard DDR5 modules that most analysts haven't fully priced in yet. When you look at the MU stock analysis today, it's not just about what they are selling to the big AI players, it's about the scarcity they are intentionally creating in every other segment of the semiconductor world. This tension between the slow recovery narrative and the supply shock reality is exactly why we are seeing such aggressive bidding at these levels. Most people look at Nvidia stock as the only way to play this trend, but Micron is essentially the fuel for those engines. If you've been using online investing platforms or searching for investment help to diversify your tech holdings, you've likely noticed that the chip sector has become incredibly bifurcated. The general market narrative says memory is a commodity, a boom and bust cycle that eventually punishes anyone who buys the top. However, the reality is that HBM is not a commodity. It's a highly specialized, high-margin component that is currently sold out through 2026. This isn't your grandfather's memory cycle. Micron has successfully transformed from a price taker in a crowded market to a price maker in a specialized one. This shift is clearly reflected in the institutional activity we're seeing on the Interactive Brokers platform and across major individual brokerage accounts today. Large funds are rotating out of speculative software into the hard physical infrastructure that makes AI possible. The recent stock movement has been a masterclass in overcoming macroeconomic pressure. Despite fluctuating interest rate expectations, MU has maintained a bullish posture, holding its 50-day moving average with remarkable strength. This suggests that the sector momentum is outweighing the broader market's hesitation. When you check your Fidelity mobile app or monitor the Robinhood app for intraday swings, you'll see that every minor dip in Micron is being met with immediate buying pressure. This behavior is typical of a stock in a buy-the-news phase, where even neutral updates are being interpreted through a lens of extreme optimism. The trading volume indicates that it isn't just retail traders chasing the rally, it's the big money behind Fidelity Investments and Fidelity Wealth Management positioning for a multi-year upcycle. Now, let's talk about what this company actually does and how they got here, because context is everything when you're trying to self-investing for the long term. Micron Technology is the only major American-based manufacturer of memory chips, a position that gives them a unique strategic advantage in a world increasingly worried about supply chain sovereignty. They specialize in DRAM, which is the working memory of a computer, and NAND, which is the long-term storage. For years, they were locked in a brutal price war with Samsung and SK Hynix. That battle led to a leaner, more efficient Micron. Today, their business model has shifted toward high-value, high-performance parts. Their older reports showed a heavy reliance on the shrinking PC market, but their current focus on the data center has completely changed the risk-reward profile of the stock. As we look toward the future, the scenarios for Micron are becoming increasingly clear. The major catalyst on the horizon is the next generation of HBM, known as HBM4. If Micron can hit their yield targets on these chips before their South Korean rivals, we could see an unprecedented expansion in their market share. The risk, of course, is that the high capital expenditure required to build these new facilities in Idaho and New York could weigh on their free cash flow if the AI spending from companies like Apple stock or Tesla stock starts to cool down. However, the expectation of a cool down assumes that AI is a fad, while the reality of the data center build-out suggests it is a permanent structural shift. This is the kind of insight you need when navigating investing sites or deciding where to place your capital on the Robinhood stock trading platform. The opportunities here are tied directly to the memory wall, the idea that processors are becoming so fast that they are being throttled by the speed of the memory feeding them. Micron is the one solving that bottleneck. For anyone managing a SoFi active investing account or using SoFi stocks to build a portfolio, the question isn't whether the technology is good, it's whether the price reflects the potential. At these levels, the market is pricing in a lot of success, but it may still be underestimating the sheer volume of memory required for autonomous vehicles, sophisticated robotics, and the next wave of edge computing. This is a stock that forces you to think about the physical reality of the digital world. Before I wrap this up, I want to hear from you. Comment below how many shares of Micron you currently hold, or if you are waiting for a pullback before jumping in. Do you think the current AI spending spree is sustainable through the end of the year? Your engagement helps us gauge the sentiment of the community and keeps the discussion grounded in real-world trading experience.
To summarize the central insights, the tension between the expectation of a typical commodity cycle and the reality of a structural HBM-led transformation is the primary driver of the current price action. Micron has moved beyond its origins as a consulting firm to become a critical pillar of global tech infrastructure. Whether you are using a Fidelity trading platform, a Robinhood crypto and cash management strategy, or an Interactive Brokers account, the core thesis remains the same. Memory is the new oil, and Micron owns the most sophisticated refineries. The authority they've built in the space is backed by massive US government support and a sold-out order book that stretches well into next year. While the cycle will eventually turn, the floor for this stock has likely been raised significantly. As you evaluate your options across various investing sites or consult with SoFi robo-advisor tools, keep your eye on those HBM yield numbers. That is where the battle for the future of memory will be won or lost. Micron is no longer just a participant in the market. They are the market's heartbeat. Maintain your discipline, watch the volume, and remember that in the world of high-stakes tech, the physical components often tell a much truer story than the software promises. The reality of Micron's position is far more powerful than the market's initial expectations, and that is why it remains a focal point for serious investors everywhere. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.